I realized that it was just last week that I gave you an update on the EV tax credits. However, just on Wednesday night, we had an updated bill. So here in November, we're getting the final language starting to come together. And although we really thought October 28th represented probably the last version of this bill, as it turns out, there were a few minor changes that are going to have an impact for a lot of you who are waiting on these tax credits. In addition, I had a lot of questions following that video, and there were a lot of the same questions, so I want to make sure I help get this as clear as possible for all of you.
What's up, everybody? Bearded Tesla Guy here, once again teaming up with Charity Stars to get you a chance to win a Tesla Model Y Performance plus $10,000 in cash. All you have to do is visit charitystars.com/BTG, and with your donation, code BTG will get you an extra 100 entries to win a Performance Model Y and that $10,000 cash. Right now, Charity Stars is raising funds for the Jamie Kimball Foundation for Courage. The mission at the Jamie Kimball Foundation is to create a future without intimate partner violence. So your money is going to a great cause, and you have that opportunity to win a Performance Model Y. What more could you want? Now, before you do enter into this, make sure you check with your physician. 0 to 60 in 3.5 seconds. Although it is good for your overall health, everybody's heart is a little bit different. So make sure you take precaution, because you can win a Performance Model Y just like this one. So again, go to charitystars.com/BTG and make sure to enter code BTG if it's not already there. That'll get you 100 extra entries. The entry level is only $10. So for $10, you get 100 extra entries and your chance for a Performance Model Y plus $10,000 in cash. So I hope that you'll join me in this very good cause to raise money for the Jamie Kimball Foundation for Courage.
So to start off with, we're talking about the Build Back Better bill. Now, this is going to include a number of bills that are brought in together, and one of those includes EV tax credits. Now, we had a Senate version and we had a House version. The Senate version, if you recall, was retroactive, and it was May 24th, 2021 that it went all the way back to. So as long as you bought your car after May 24th, you would still qualify for whatever the tax credits were that went into the final bill. However, the House bill was not retroactive. As a matter of fact, the House bill, as it's written right now, it states very clearly this applies to vehicles acquired after December 31st, 2021. Or when the bill is signed, whichever is later. So even if they sign it now, it won't go into effect until January 1st. So with that said, the Senate bill is dead. It is not moving forward. The House bill is the bill that was brought in to Build Back Better. So that is the framework that's being used, and that's why there is so much confusion about, is this retroactive or not? It is not retroactive. So let's do a really quick recap of what all is included in this House bill, including the changes that just happened on Wednesday night. So this bill will be for 10 years. In the first 5 years, it's going to include all EVs globally. After that first 5 years, the remaining 5 years will only apply to vehicles made here in the United States. So they have to be final assembled. That doesn't mean everything has to come from the United States, but it does need to be assembled here in the States. This bill does take that original $7,500 tax credit and now makes it refundable, which is a big distinction. That means it does not matter what your tax liability is. You get the full $7,500. Then of course we have those popular bonuses that are being added on top of that $7,500. First and foremost, that $4,500 bonus if the car is assembled by a union factory. So it's very limiting to the number of EVs. As a matter of fact, there's only one EV in the entire country today that will qualify for that $4,500, and that's the Chevy Bolt. Now that will change in the future as the F-150 Lightning comes online, as well as the Silverado and potentially some of the other General Motor options that are being talked about. In addition to that, there's another $500 if the battery is made here in the United States. So that is going to be an important distinction even for Tesla, because some will and some will not qualify for this credit of an additional $500. More on that later. One of the biggest and most important changes that happened just on Wednesday is the MSRP caps on vehicles. Unfortunately, for those thinking about a Model 3 Performance, the sedan cap did not change, so it is still at $55,000. So every sedan under $55,000 will qualify. So the Tesla Model 3 Performance is just outside of that MSRP cap, so that will not be included in this tax bill because it's too expensive. Now, the great news for everybody else, vans went up to $80,000 MSRP cap, trucks went up to $80,000, and SUVs also went up to $80,000. So they were able to get this quite a bit of a jump to cover a broader range of vehicles. Now, $80,000 cap does now include, I believe, almost every F-150 Lightning that you can order, and it also now makes the Rivian also available for these tax credits, which is really important. I know a lot of you were very concerned because you had to get a base battery Rivian before in order to qualify. Now you can get the bigger pack and still get that tax credit. In addition, the SUV, the R1S, is also now going to qualify. So this is great news for Rivian. One of the other changes that happened on Wednesday was also the income caps changed. Now they were brought down quite a bit. If you remember, it was $400,000 income for individuals and $800,000 for joint filers. That has since been reduced quite a bit. Individuals are now capped at $250,000, $375,000 for head of household, and $500,000 for joint filers. So now that cap is down $300,000 for households and $150,000 for individuals. So this is bringing those income caps down quite a bit, but it's still high enough that most people are going to qualify, and that's the important thing. Fortunately, the bill did retain a credit for used vehicles. Now those rules are still the same, so it has to be at least 2 years old and it cannot exceed $25,000 in price. So you're going to get a base credit of $2,000. Now, if the battery is larger than 40 kilowatt hours, for the first 5 years you'll get a $2,000 bonus. The second 5 years, it needs to be 50 kilowatt hours or larger, and you'll get that $2,000 bonus. So up to $4,000 for a used car that's 2 years old or newer and less than $25,000. The effective date of this bill is going to be after December 31st, 2021. So no matter when you bought your car in 2021, you will not qualify for these changes in tax credits. So only cars that still have access to tax credits would still qualify. But again, that $7,500 tax credit is based on your tax liability. So you may not get that full $7,500. Starting January 1st, you're eligible for the entire credit based on what criteria the vehicle you purchased falls in. So it does not matter what your tax liability is. In addition, they did add some language, and this was a question I got a lot on the previous video as well. They are trying to prevent people from overdoing it with these tax credits. So now it says very clearly this is limited to 1 credit per taxpayer per tax year. So that means you can only claim this 1 time per year. So the good thing is you can still claim it on future purchases over the next 10 years, which is great. But it's not going to let you buy several cars this year just to sell them later. So I think that this is smart. This is a good way to put some controls in place to prevent people from abusing the system. However, what does that mean? It's taxpayers, right? So if you have a spouse, you're both technically individual taxpayers. I am not a tax professional, so I'm not sure if that means if you are a spouse, you can both get a car with that credit. That I do not know. So we will wait to get more clarity on that topic in the future. So let's break this down because there are some differences here. As I've said before, Teslas are going to have different levels of tax credits based on which car you get. The Model 3 is a very clear example of this. All 3 models of the Model 3, the standard range, the long range all-wheel drive, and the performance, all 3 have different level of tax credits. Starting with the standard range, you're going to get that base $7,500, which is a good thing. However, moving forward, Tesla is putting the LFP battery pack in the Model 3 standard range. Because of that, those packs are coming from China. That means it will not get that extra $500 boost. So your total credit for the standard range Model 3 will be $7,500. Now moving up to the long range all-wheel drive, of course those batteries are made here in the United States, so you will get the $7,500 credit plus the additional $500 boost, giving you an $8,000 credit total. And then finally, the performance. The MSRP cap is too high for a sedan, so you will get 0 credits across the board. Over on the Model Y, the long-range all-wheel drive will get $8,000, as well as the performance, which also gets $8,000. Now, as far as timing of receiving your tax credit, so there's 2 dates to keep in mind. In the first year of this bill, so all of 2022, you will receive your tax credit at time of filing your 2022 tax return. So sometime in 2023 in that first quarter, as you're doing your taxes, that's when you're going to get your credit. So if you were to get a Model Y long range as an example, you will receive that full $8,000 at time of filing your taxes, regardless of what you owe on your taxes. There, moving forward, starting January 1st, 2023, this credit will be realized at time of purchase. So that gives the government a full year to roll out and implement a system to be able to recognize that $8,000 credit and pay the dealer or the company that's selling you the vehicle that credit on the spot. That way you can receive that $8,000 at time of purchase rather than waiting for your taxes. So starting the second year and all the way up to the 10th year, you will receive this credit at time of purchase. But for the next 12 months, starting January 1st, you will not receive this credit until tax time. Now, I did pull together a list of vehicles that are coming in the very near future and some that are available today, just to give you a sampling of what to expect based on which car you get. So there's several categories here, but this is what it should look like for you. Right now, the only vehicle getting $12,500 is the Chevy Bolt. However, the F-150 Lightning will also receive that full $12,500, and then the soon coming Chevy Silverado will also receive that full $12,500. Of course, there's other variants that those manufacturers are working on that may be coming soon that would also qualify for $12,500. All Teslas except for the standard range Model 3 and presumably a standard range Model Y if it comes back will all be receiving $8,000. So $7,500 for standard range models, $8,000 for the rest. For Rivian, you're looking at $7,500 because the batteries are coming from China, although they are working to start making those here domestically. So that $7,500 credit for Rivian would then go up to $8,000 should they get these batteries started to be made here in the United States. And then finally, there's everything else, everything that's coming offshore, including the Mach-E. The Mach-E is built in Mexico. It does not matter that it's built in a union factory in Mexico. It's not an American union. So that Mexican-built Mach-E is only going to get $7,500, as well as the Hyundai Kona, the Audi e-tron, and on and on and on. There's a number of EVs coming from other manufacturers outside of the United States that will get that $7,500. Now here's the kicker though, as you recall, that is only for 5 years. So at the end of 5 years, this will no longer qualify for any tax credits. No tax credits for any EV outside of the US. So this is a good way to bolster EVs here in the United States, help incentivize people to buy them, however, also incentivize manufacturers to start putting plans in place to start building these cars here in the United States. So we'll see how this all plays out in the end, but that's kind of the general overview for you. Remember, tax credits will be realized when you file your 2022 tax return, or if you buy it in 2023, it'll be at time of purchase. All that said, Democrats in Congress have indicated that they are planning to vote on this week. Now, I'm not holding my breath and it could be delayed a bit, but it seems like there's a lot of pressure to get it done. So this is good news. We should start seeing things move very quickly, and hopefully we'll just have one more update on this and it'll be done for good. Then we'll know exactly what's going on with these tax credits. Now, for those of you who have an order and you're waiting for your VIN and you're seeing your delivery date come in closer and closer, you may want to contact your advisor to put your vehicle on hold. To do that, just contact them, let them know, and they can put it on hold until January of next year. Now, the first 2 months of every quarter, they generally make cars for other markets. So by putting it on hold in January, you're likely not to get it till after March. But that's just generally how it works at Tesla. So we'll see how the rest of this quarter goes. And for those of you who are anticipating getting these tax credits, congratulations. I think that this is going to be a huge benefit for Tesla and other EVs on the road. I hope that you enjoyed this video, and if you did, of course, give it the thumbs up. If you haven't already, of course, subscribe to the channel as we continue to post content regularly. You can follow us on Twitter and Instagram @BeardedTesla. Thanks so much for joining us, and we'll catch you next time.